Welcome to the Powerhouse Ideas. Let's begin.
Hello everyone, welcome back to the Powerhouse Ideas. By this video, I have got a very important topic for you in which I'll be explaining you 8 common mistakes which a trader does and is not aware about these mistakes, and he keeps on doing it and keeps on losing money. So by this video, you should understand that what are the mistakes you should not make so that you are not losing your hard-earned money in this market and you start walking on the path of profits, on the path of success. So these are the mistakes which I have learned during my trading career, during my market career. I have been into these markets for more than 4 years, and I have learned these mistakes one by one, and I have also done it. There was no one to tell me that these are the mistakes you should not do. These are the mistakes which I have learned with experience, but I am telling you that these are the mistakes you should not do. These are the mistakes which should not make your profit or your hard-earned money go waste or go to the markets or the other people's hand. So listen to them one by one, understand them so that you don't make losses in the market. But before that, you should hit the subscribe button and the like button if you haven't done it, because उसमें कोई पैसा नहीं लगता है. You are getting free knowledge without paying anything. You are not going to pay anything for this video. You are not going to pay anything for any kind of webinar. It's absolutely free. So it's worth the effort. आपको like तो बनता है. Kindly like the video, subscribe and press the bell icon so that all the videos are available on your phone screen as soon as I upload them. So let us start. The first mistake which a trader does is trading against the trend. Now let me explain you what is trading against the trend. Most of the traders don't know that they are committing a mistake. I have seen people who are buying in anticipation, who are buying in hopes that one day this trend will change, one day I'll be coming in profit, one day this stock will reverse and start moving upwards, and this one day never comes. Let me give you an example of it. This is the stock Yes Bank for you. Most of the traders I have seen are very positive about this stock. They say that this stock is available at a very low valuation, that is 14 rupees, and one day it will again touch its all-time high. What the most of the business channels shows you that over here, let me show you it on the screen. Like over here, there was a small downtrend and there was a breakout over here with some good volume. No doubt there was a small downtrend over here which is being shown by the business channels or other YouTube channels. There was a breakout with some good volume. They will make you buy these kind of stocks at this position. If you are lucky enough, you must be buying this stock over here and may move out of the profits from this day. Or if you won't move out this profits, you might be thinking that this is one day when a lower circuit has been achieved. After moving up this much, it has fallen this much, I'll move out on the second day. Then that day does not ever comes. So they make you trade in this kind of stocks. Now you will say that what is trading against the trend? I am trading with the trend. I am trading in an uptrend. But let me show you a bigger picture which the business channel or the other YouTube channel never show. Let me show you that. They don't show you this picture which is in front of you on the screen. This stock was once trading at rupees 400 approximately and now trading at 14 rupees. If this stock would have been that good, wouldn't have been such a great fall in this stock. So this is called trading against the long-term downtrend. If any kind of stock is having this kind of pattern which is in front of you, you should stay away from that stock even for investing or trading purpose. Whatever the case may be, you should not trade in this kind of stock. Because every stock which is in downtrend will be giving you some dead cat bounces like over here. These are called dead cat bounces in which you can get stuck over here and got your money stuck forever. So this is trade mistake number 1 which any trader makes, which you should avoid. Like over here also we can see some volume coming and the break of consolidation. But we know that this stock is in an overall downtrend, a long-term downtrend, and there is no scope of its reversal. Because if this company would have been that great, तो ये इतनी गिरी नहीं होती यहाँ तक. Similar example for this kind of stock is Suzlon. Let me show you that. The business channels tell you that this stock was in a short-term downtrend and has broken this trend line over here and started moving in an uptrend. They will make you buy this stock over here or over here. if some of the traders are lucky enough, they might be entering into this trade over here and book the profit over here and move out. No one knows when it will start its downward journey again, because let me show you a bigger picture. This is the bigger picture of the stock. This stock has also always every time been in a downtrend, which is this kind of chart pattern should be avoided by you. No doubt some volume is coming at the bottom. Till the time the long-term downtrend is not positive, you should not trade, you should not invest in these kind of stock. This is tip number 1 or the mistake number 1 which you should not do. Let us move to the next mistake. Next mistake is following tips or having no plan. When you listen to some of the business channel, you follow the tips. They give you a tip like buy XYZ stock on this price and keeping a stop loss of this price. If something bad happens into the stock, or if a news comes which you are not aware of because you are just trusting that person, you won't be able to get out of this stock, but the other person will be comfortably getting out of the stock and booking his losses or profits as the case may be. So trusting anyone for your hard-earned money is the worst thing a trader can do. You need to identify your own setup, your own strategies to be profitable in the market. You should not trust any of the tip providers, because if they are so capable of making money in the market, why would they give tips to you? So anyone who does not gives you a proper reason for buying those stocks, then you should not trade on those tips. Discussion is okay. If you're discussing with your friend and he informs you that he thinks this way, that this might be the reason of stock going up, then that is okay. But blindly following anyone is not advisable in market. You need to trust yourself, and it is your money which is involved. So you have to take the decision yourself. The mistake number 3 is no stop loss, or you don't know where to keep the stop loss, or you keep on averaging down the position or carry forward your losses. Most of the traders make this mistake. Whenever they enter into a trade, they don't make a stop loss, or if they are considering a stop loss or planning a stop loss, they don't book the loss at the stop loss, or they keep on averaging down when the stock is falling. Whenever we are earning profits, we get into a kind of worry and are in hurry of booking the profits. We might be booking a profits at 4%, 5%, 10%. But whenever it comes to losses, we carry forward our losses in the anticipation that one day the stock will turn back. One day I'll be coming into the profitable position, and we keep on carry forward our losses, such as 10%, 20%, 30%. We keep on carrying them till the time we lose our entire capital. So stop loss is very important in market. You should know where to keep a stop loss. And example of averaging down is, suppose if you are into a position where you have invested rupees 10,000 and you are running into a loss of 1,000 rupees. Whenever the stock falls, you average it down. Whenever it again falls, you again average it down. By this, you will be infusing more of capital in that single trade. And because of that reason, if that particular share does not move in the upside direction, all your capital will be stuck. So it's better never to average down, only average the stock when it has changed the trend and started moving upwards, because putting money in a failing trade is not advisable. Putting money in a winning trade is only advisable in market, and this is one of the biggest mistake any trader does, and he is not aware about this kind of mistakes. So let me give you an example where to keep the stop loss. Like take the example of sale over here. Stop loss is always kept at an area which is holding an importance or which is working as a good support. Like in this case, the stock was in an overall uptrend. This is mistake number 1, which a trader does not see. The stock should be in an overall uptrend for trading purposes. Second, the stop loss should be below an area which is holding importance. Like in this case, this area has been holding importance. So there are chances that this stop loss won't be hit. Now what some of the trader does is, the stock started moving up, they buy it over here and keep a stop loss over here. But there is no area in between to prevent a stop loss from being hit. So you need to identify these kind of areas for taking the trade so that your stop loss is not hit and the stop loss can be kept below these areas like here. So most of the trader does not know that. They buy it anytime, keep a stop loss 10-15 points downside and take the trade. Trading is not like gambling. It's like a business which you should do with all your brains and considering a proper plan in your mind. So let's move to the mistake number 4, which every trader does. The fourth mistake which every trader does is leverage trading, overbuying or revenge trading. Leverage trading is that when you are having 10,000 in your pocket and you are buying stocks worth rupees 1 lakh or 50,000 maybe, that is you are leveraged by 5, 10 times. So for example, you are leveraged by 10 times, that is with 10,000 rupees, you are buying stocks of 1 lakh rupees. So just imagine if you are gaining 10%, you will be gaining 100%, but if you are losing 10%, you will be losing entire capital of yours. So leverage is the worst thing any trader can do, which you should not adopt. You should make a habit of trading in your money so that you don't lose the entire capital. The other is overbuying or revenge trading. Whenever you lose in a market, you get your emotions involved. You think that how can I be wrong? The market is always wrong, and how can I be wrong? This is the most wrong thing which a trader can think or a trader can adopt. Whenever you lose a trade, you should stay away from the system, stay away from your mobiles, laptops for some time so that your emotions don't get involved and you do not revenge trade. Don't trade in an anticipation that this time I have to take out my losses, this time I have to overcome my losses. This won't happen, and by revenge trading you will be losing more and more of money. Most of the traders might have seen that whenever you take a buy position, it started going into the selling side or starting going to the downside, then you exit the buy position and take the selling position and starting moving to the buying side. So this is like revenge trading. You are not trading against the market, you are trading with the market. If your setup is not working or your trade is not working, stay away from the trade because your capital is limited but trading opportunities are limited. If you are not able to take the trade today, there is always a tomorrow for taking the trade, but your capital need to be saved. So this was mistake number 4, which any trader can do. The other mistake is FOMO, that is buying in the push phase. Let me explain you with this example. Like for example, in this stock only, we are sitting over here somewhere and we are seeing that this stock is moving in the upside direction continuously. Now we are in a kind of FOMO situation, that is fear of missing out situation, and we buy this stock over here seeing that this stock is rallying to the upside and this stock is moving to the upside. We should not lose this position and we should not avoid this situation, and we can gain the most of the situation. So what we do is in FOMO, we buy the stock at this position seeing this upside rally and keep a stop loss somewhere over here, which I've already covered, that without any reason we keep a stop loss, without deciding the reason we keep a stop loss. What the market does, it moves slightly upwards, eats a stop loss over here which was kept over here, and again started moving up. So you should never be in a FOMO, that is fear of missing out. You should never buy in this push phase. You should wait for this pull phase to happen, to consolidate a bit and then again start moving. So this is the right time for buying this stock. This is not a trading advice. I'm just explaining to you that this is the right time of trading a stock, that it should be bought only after the pull phase has completed and push phase is starting, so that we can get the best stop loss and the best entry in each case. Now let us move to the next mistake. The next mistake is buying without confirmation. What I mean by this is that most of the traders might have seen, let me explain it with an example. For example, let me do some drawing over here. There is a triangle pattern being formed over here and the candles are being formed like this over here. On the day of the breakout, you might see a candle forming over here in the very start of the day, a green candle forming over here, and you at that moment only get into the trade. But by the day end, you will see that this candle which was forming, which was showing a breakout over here, might close inside the triangle only. So you are trading in an anticipation. You are trading not waiting for the confirmation, that is the candle to close. You should wait for a complete confirmation that a candle closes for a breakout, because a breakout is set when the candle closes. So if you are trading on a daily time frame, you should wait for the end of the day, at least till 3 o'clock, that this is confirmed, this breakout is confirmed and this candle does not closes inside the range again. And many of the time it's happened that when we take the trade on an anticipation that breakout has already happened, it closes within the range again on the same day, and the next day started moving downwards and hits our stop loss. So we should always wait for confirmation and a candle close in our favor. Till the candle is not closed in our favor, we should not enter the trade and we should not consider that a confirmation has been received. So this was another mistake which any trader does. Let us move to the next mistake, that is trading penny stocks. Penny stocks, which I've already explained, like Yes Bank, Suzlon, PC Jewelers, these are the penny stock which we consider most of the traders doing a mistake, that these stocks are available at a very cheap rate and we should buy them because they will be becoming multi-bagger. No, this is not the scenario, because those are those stocks which have lost their value due to its fundamentals. So running against the penny stocks like Yes Bank, Suzlon or Alok Industries is not advisable, because one of the reason is because of the fundamental, they have fallen to such great levels, such small levels. And other thing, that if these stocks would have been that good, they won't be trading at these levels, and the volume is also very less in these kind of stocks. So technical analysis does not works properly in these kind of stocks. Due to low volume, it can be easily manipulated by one small or big order, they can be easily manipulated. So this was the 7th mistake which a trader does. Let us move to the last mistake, that is the most important one. When you consider trading as a gambling or put all your eggs in the one basket. For example, if you are seeing that any stock is creating higher highs and higher lows on every day, and it has, for example, reached from 100 rupees to 200 rupees, that is given 100% return. What a trader generally does to earn good profits, he puts all his capital in that particular share only, and from the very next day it started falling. So it is said that never put all your eggs in one basket, that is never put all your money in one share, because you are having only one thing in your favor, that is it will go up, then you will earn, or it will go down, then you will lose. But by diversifying, you will be saving most of the capital. For example, let me give you an example. If you are taking 10 trades and your trading percentage is 50% profitable. Now if you take and you have 100 rupees with you. Now if you put all the 100 rupees in one trade, then you know that your trading percentage is 50% profitable. There are chances that this one trade only might turn against you because you are only having 50% probability. Now just imagine if you diversify these 100 rupees, that is you put these 100 rupees in 10 different trades. Now we know that your profitable percentage is 50%. So assuming that you take 10 trades, out of that 5 are win and 5 are lose for you. So in the trades which you win, you will be earning 10 rupees, and in the trade which you lose, you will be losing 5 rupees. So in net, you will be in profit of 5 rupees even after 10 trades. But this won't be the scenario in this case. So this is one thing which every trader should avoid. It should not consider trading as a gambling. It's pure business which should be done with all the skills. No doubt every business has risk involved. This business also has risk involved. But if you have proper skills, proper discipline and patience with you, you will be earning profit in the market. So these are the 8 mistakes which any trader should not do. If you think that there are some other mistakes which a trader should not do, you should comment in this comment box of this video so that other people who are watching this video can learn if I missed out something. And all these efforts will go in vain if you are not liking this video, not subscribing with this video and not pressing the bell icon. I will be coming up with more such videos for you. Till that time, take care. Bye bye.